Hi viewers, you are watching Millennium Academy Accounting Hub.
Dear students, today we will learn the statement of cash flows. This lecture will cover the following key points. Understanding cash flow statement. Preparing a cash flow statement using a direct method. Cash flows activities. Let's start. Statement of cash flows. A financial statement that reports the cash inflows and outflows for an accounting period, and that classifies those cash flows as operating activities, investing activities, and financing activities. In the operating activities section, the major classes of cash inflows and cash outflows are recorded separately. The operating cash outflows are subtracted from the operating cash inflows to determine the net cash provided or used by operating activities. Investing activities involve the buying and selling of long-term assets, such as property, equipment, and investments. This section tracks how these purchases and sales affect the company's cash flow. Subtract the cash outflows from the cash inflows to determine the net cash provided or used. Financing activities deal with how a company raises or pays back long-term funding. It involves sources of cash from issuing debt or equity, and uses of cash for repaying debt or distributing dividends to shareholders. Subtract the cash outflows from the cash inflows to determine the net cash provided or used. Net increase in cash is the difference between beginning and ending balances of cash and cash equivalents. Here are some key points on the importance of cash flow statements. Cash flow statement is essential for understanding a company's financial health. Cash flow statement reveals a company's ability to generate cash, meet its short-term obligations, and fund future growth. Investors use cash flow statements to assess a company's financial stability.
If you like a video, then please subscribe to our channel and press bell icon for regular updates.